Well, holy flippity flip flop flapping smokes, everyone. Things just got so bad I had to sell my suit and tie. We just got breaking news just in minutes ago, and I'm gonna upload this video as fast as possible because this is the biggest story we have heard in decades. Did you know it was just announced that October saw the highest amount of layoffs for an October in 22 years? And we haven't seen this many layoffs since 2008. And what's even worse is this is happening right before the holiday season, normally when companies are meant to be on a hiring spree. And also me, I work on YouTube. Normally this time of year, companies are spending big. But I can see the amount advertisers are paying for ads right now, and it's down 50% compared to last year. So people, you need to pay attention to what's happening right now, because I think what we are in right now is a severe recession, but the reason we've had a government shutdown is to hide it, and they always delay the data, so we won't actually know we're in a recession officially until we get the data 6 months later. But I don't think we have to wait. I think after you see this report, what I'm about to show you now, you will know it is no longer speculation. There is zero doubt we're in one of the worst recessions we've had in decades. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Well, holy smokes, look at this, everyone. Job cuts in October hit the highest level for the month in 22 years, according to Challenger. So that's right, not a bad year, not a bad couple of years. This is the worst October in over 22 years. Layoff announcements soared in October as companies recalibrated staffing levels during the artificial intelligence boom, a sign of potential trouble ahead for the labor market, according to outplacement firm Challenger, Gray, and Christmas. So this is what everybody's saying. They're saying AI boom. It's all because of AI, the reason we're having these job cuts. But really, it's multiple things that's leading to these huge mass layoffs. Yes, we do have AI, but I think once companies realize that AI can't do everything and it can only do a very specific task, but once a problem comes up, it can't simply solve that, at least yet, they're probably going to have to rehire those people. But there's two other big factors at play. Second, we have the government shutdown right now. People aren't getting paid. People can't spend on holiday items. So a lot of these companies that may have wanted to hire people for the holidays, well, they're now having to lay them off. And also tariffs. Prices are going up. Companies normally would increase their prices, but people are saying, look, I don't have money to pay these high prices. So companies are simply having to lay staff off because their bottom line and their margin is getting squeezed. But listen to just how many layoffs were announced in October. So it says here, job cuts for the month totaled 153,000, and get this, 183% surge from September and 175% higher than the same month a year ago. It was the highest level for any October since 2003, and this has been the worst year for announced layoffs since 2009. And what is to happen after 2009? Well, that was right after the great financial crisis. But we're not even in a financial crisis yet, so imagine how bad things are really going to get. So like in 2003, a disruptive technology is changing the landscape, said Andy Challenger, workplace expert and chief revenue officer at the firm. At a time when job creation is at its lowest point in years, the optics of announcing layoffs in the fourth quarter are particularly unfavorable. That's exactly right, and I would actually add another reason why a lot of layoffs are happening is because of globalization of the workforce. A lot of these jobs, if they can't be replaced by AI, they're also offshoring these jobs. The report provides a glimpse into the labor market at a time when government has suspended data gathering and releases during the shutdown in Washington, D.C. So that's exactly right. Why isn't the government releasing this data? Well, I think this is probably why. Because things are very, very bad and the current administration doesn't want you to know how bad it really is. Now, the report comes at a time when Federal Reserve officials have expressed concerns about a softening labor market, and the central bank has lowered its benchmark interest rate twice since September and is expected to approve another quarter percentage point reduction in December as policymakers look to get ahead of any more serious problems. So everyone, you know what the Fed's going to do, what they always do, and you know, what's insanity? Doing the same thing over and over again and expecting a different result. They're going to fire up the money printers. They're going to lower interest rates. They're going to start buying bonds again. But what this will lead to is, yes, you'll still get laid off, but at least they'll bail out the banks and these mega corporations. That is, unless we people say enough is enough, no more bailouts. So what industries are seeing the highest layoffs? Well, that is coming from the technology sector amid a time of restructuring due to AI integration. Companies in the sector announced 33,281 cuts, nearly 6 times the level in September. So that is crazy. Things are changing and changing quick. And it's funny, all these people that want to make money, so they're getting into AI, well, they're the first ones that are going to get replaced, those creating the AI. Consumer products also saw a sharp gain to 3,409, while non-profits in area hit hard by shutdown listed 27,000 cuts year to date, up 419% from the same point in 2024. So in total, get this, they've announced 1.1 million cuts this year, a 65% increase from a year ago, and the highest level since the pandemic of 2020. So that's right, we're seeing the highest amount of job cuts since the financial crisis and since when the entire world got shut down in 2020. Is this not now starting to hit you to show you that we are in huge economic trouble? So it says here, some industries are correcting after a hiring boom of the pandemic, but this comes as AI adoption, softening consumer and corporate spending, and rising costs drive belt tightening and hiring freezes. Those laid off now are finding it harder to quickly secure new roles, which could further loosen the labor market, a challenger said. So boy, oh boy, oh boy, everyone, it is happening right now. Again, I think we are already in a severe recession. The data shows it. And the reason why we haven't had a really bad recession in the past was because the unemployment rate still stayed pretty steady. But once the unemployment rate continues to climb, well, then we're going to see companies' revenue fall. We're going to see people default on their mortgages. We're going to see people default on their credit card loans, their car loans, and this is going to have a domino cascading effect. Like I've been telling you over the past week, don't look at the stock market. When this report came out, the stock market actually went from negative to positive, and who knows how it will finish. The stock market is not the economy. The real economy, people's jobs, is getting absolutely decimated. So everyone, you simply cannot ignore it. You need to pay attention and start preparing your finances right now before it's too late. If you still got a job, work very, very hard. Try to find a second job or a side hustle. I know it's hard. I know it's not the easy solution you want, but so that way, if the market does crash, you'll actually be one of those people that actually has money. Because what happens during most recession is people get laid off, they don't have an emergency fund, they've got huge amounts of debt, and they can't buy assets for pennies on the dollar when the opportunities are there. So go ahead, make sure you're paying off debt right now while you still can, creating that emergency fund, getting the dry powder ready there to deploy for when we see huge sales and huge discounts. Of course, like I always say, gold is a non-correlated asset when we see huge recessions, and I think this is why we've already seen gold climb, because markets try to predict things that are happening or they're forward looking. This is probably why we've been seeing gold rising so much, along with central banks buying huge amounts of gold, because the big money, the smart money, knows of the times that are coming. So everyone, let me know down below, have you been laid off, or do you know a neighbor or a family member that has been laid off recently? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. I hope you don't get laid off. I hope you are doing well. Thanks for watching. I'll see you all in the next video.